Hello everybody, Carl Keister here with ClearSurf Financial Education. Welcome back. So today I wanted to touch on the fact that the Dow Jones has finally closed above 30,000, which is quite an accomplishment when you think that the market corrected about 38% back in March. We were teetering close to 30,000, and after a 38% correction down to 18,500, we have now touched 30,000 and very 6, 7 months, 8 months later. This is pretty phenomenal. And part of this is the fact that President Trump is starting to open up and allow the transition team to start working a little bit more for Joe Biden and his team. And that's looked as a positive light, in a positive light. Also, you see that a third company now has come out with a vaccine that shows promise. So we're not going to be relying on just one company. There's going to be multiple companies coming forward here very shortly. So that's another positive. And then you just have this relentless people just buying. The sellers aren't there. It just seems like every dip is bought, and this has been going on since March. And technology, of course, has led the way with the big five: the Amazon, Microsoft, Apple, Google, Facebook. All the cloud companies are just flourishing. So everybody's piling into those. And anytime anybody steps up to sell, there's more than enough buyers to take their place. So this has been ongoing now and just keeps driving the market higher. Now, you do want to keep in mind, this is usually the time for a Santa Claus rally. So traditionally, statistics have shown most of the time, this time of year has been positive. It's a very positive time of the season. Generally, people are in a good mood. Maybe not so much this year. And quite frankly, I think people are going to be spending less this year at Christmas. I've read a number of articles that suggested that spending will be curtailed this year because there is still a lot of uncertainty out there. People are still, less hours, maybe uncertain about the job. So maybe they will cut back a little bit on the spending, which I would not be surprised. But I also think one of the other biggest movers of the market right now is the fact that Biden is starting to pick his team, and it looks as though Janet Yellen, the former Fed chair, is going to be his Treasury Secretary. Now, she has been very dovish, kept rates low, so I think the market is looking at this and saying, well, if she's going to be the Treasury Secretary, there's probably more stimulus coming down the line, and they're probably going to keep rates low for a long time, and this may be good for the longer term investor because low rates, easy money, companies that want to borrow money have access to it through the stock market at an all-time high, or easy lending practices by the banks. And the Fed's been more than accommodating to keep rates low, to keep the system lubricated. So right now it looks as though it's pretty good. And then also you're seeing some overseas companies that are talking about, that this could be positive with Biden coming in. So now that the China trade war might start to be put on the back burner or reduced altogether, maybe not so much animosity with Europe and other companies overseas. So we'll see how this all plays out. But for right now, the market definitely is looking at this in a positive light. It's going to move higher. And I wouldn't be surprised to see this slow grind higher through the end of the year. We just don't know what's going to happen, what could happen. Obviously, there's a lot that could happen. But I think between now and the inauguration, there's probably going to be just a little more slow grind higher because that's what a lot of people are just surprised to see it. And I think that's what's going to, unfortunately, it's going to keep grinding higher. So that's good for retirees. That's good for people that are new to investing, but you just want to keep it in mind it may not last forever. So just bear that in mind. And that being said, we'll keep our eyes peeled. I don't want to think that nothing can happen because anything can happen. Higher gasoline prices can slow the economy down. We could always have some unforeseen terrorist threat or something like that on those lines. And also, you could get Biden in there and he could move further towards the progressives with some of his policies and picks. So if that happens, you want to keep in mind that's not going to be looked at very well with the market. But right now, I think they're going to give him the benefit of the doubt that he's going to pick people that might be more progressive than they have been in the past but it won't be this blue wave swing to the left, which would bring along a lot of regulation. Because under the Obama era, we had a lot of regulation, and the market really did not grow near as much. I should say that, because we had a Great Recession. Of course, it rallied out of the Great Recession, but there was a lot of damage done, during that Great Recession. So it really did have nowhere to go but up for a while. It took its time and definitely did grind tires. So we'll see how that goes, but keep your fingers crossed, and we'll see. As long as nothing unexpected pops up, maybe we can get back to some normalcy. I hope so. My biggest fear would be is if they get in there and the virus keeps ticking up, which it is, and if they start doing shutdowns, I'd hate to see the damage that's going to be done to, it's already being done in retail and restaurants, but it could be insurmountable if we go through some type of winter where things are shut down on a regular basis and quite frequently. That could really spell some trouble. And that could be what caused the market to pull back, whether it be before Christmas or after Christmas. That could be the next caution or next thing to make the market take a pause, or at least to consolidate and give it some breather. Because right now, you've got 2 or 3 stocks that are making up 20% of the Dow. So we've shifted from the technology stocks driving the market higher, the NASDAQ pulling everything higher. Now you've got 2 or 3, actually 3 Dow stocks that are pulling the Dow higher. So hopefully the small caps are getting some love right now, though the small caps will come along as well. People start looking into those, and that might be beneficial for us. So with that being said, we'll keep a close eye on it. We'll see where it goes. But for now, cross our fingers and hope everything keeps going smooth. Have a happy Thanksgiving. And one more thing I wanted to mention, and because this piece is on the Dow crossing 30,000 for the first time, closing above 30,000 for the first time. So one thing I want to point out is the Dow Jones Industrial Average is a price-weighted index, not a market-weighted index. So what that means is stocks that have a higher price, they move the Dow more than others. So to put that in perspective, I want to take a look at the top 10 holdings, and that might help you realize also why we went from 18,500 to 30,000 since March. So we're talking 7-8 months. So of course, number 1, largest company in the world, Apple. It's up 59% in 2020. Salesforce up 58%, right on its heels. Microsoft 36, Nike 31, Walmart 26, Home Depot 25, United Health Group 20, Caterpillar 16, that's surprising, Honeywell 16, and Procter & Gamble 14. So the reason why I mention is you've got these high-flying stocks that have a high price. Now, Apple did go through a stock split this year, but you're still seeing these higher-priced stocks that are moving up, and when they move the market a lot, or move the Dow faster than they would in other indexes that aren't price-weighted. So, but I do think that this theme is going to continue, because I'm looking at this list and there are companies in here that we have purchased from. We've done more home improvements this year than we've done in several years. So we've been to Home Depot and Lowe's, and you want to look at Nike, your Walmarts. These companies work. They're working from, whether people are working from home more, doing home improvements or creating home offices or whatever they need to do to make it work right now during this pandemic. These stocks are working and will probably continue to work. I really don't see that changing, but I just wanted to point that out because these market-weighted indexes, they act a little different than others, so you just want to be cognizant of that. With that being said, there are stocks out there that aren't doing very well, that are not rising, so you're seeing retailers, restaurants, airlines still under pressure. Right now it looks as though people aren't so quick to jump on a plane for Thanksgiving. They're being told not to by the CDSC, so I can understand why they're a little hesitant there. I don't know a lot of people lining up right now to take a cruise, to be the first on a cruise ship when it opens back up either. So there's going to be stocks, retailers, people are buying online. So people are getting educated online, buying online, staying home more. So all those reasons make me think that these stay-at-home stocks will probably continue to work. But your best advice that I can give you is stay diversified. you're going to go through these segments where the NASDAQ is going to lead, and it has been for the last several years now, but almost everything rotates eventually. The small caps are going to come back into favor. Value stocks are going to come back into favor. If oil keeps ticking up as the economy recovers and people get out more, then the energy sector should do better. If interest rates go up, I don't think they're going to go up anytime soon with Janet Yellen coming into the Treasury Secretary role. I don't think that's going to be rates going up anytime soon. I don't know who's the Reserve is going to be, Federal Reserve Chairman is going to be yet, but I still think it's going to be low rates for a while, and that means slow grind higher for stocks. So if you're a long-term investor, stay focused, look long-term, look through all the noise, because there always is noise out there. There's going to be things that could trip it up, but just stay focused. Okay, anyway, tomorrow is Thanksgiving, so happy Thanksgiving to everyone out there, and hope you enjoy your day. I'm going to enjoy mine. I'm going to take the day off, so hopefully you can do the same. All right, everybody, take care.